The following is a presentation of TFNN. The Trader's Edge with Steve Rhodes. Call now, toll free at 1-877-927-6648 or internationally at 727-445-1044. The Trader's Edge. Now, Steve Rhodes.
Good afternoon from TFNN. Welcome to the January 12th. Fantastic Friday edition of today's Trader's Edge Show. I'm your host, Stevie Perseverance Rhodes, who absolutely knows that each of us should always be pioneers of our future versus prisoners of our past. Hope everyone out there is having a great day. Let's make sure we have an extraordinary one. And of course, the easiest way to do that is to always remember that life happens for us, not to us. That's right. When you and I make that one little 2x4 shift, it means we can find the gift in every set of circumstance that life is going to toss at us. Today, you and I, we get to go check out the circumstance of these markets. We get to go figure out what the bulls and the bears, what the buyers and the sellers are communicating to you and I just past 1 o'clock in the afternoon. I want you to know that I'm absolutely grateful for your presence here. More importantly, I'm here to serve you. So feel free to pick up that phone, dial on in right now, 877-927-6648. If you can't dial in, well, let your fingers do the walking. Go ahead and send me an email at steve@tfnn.com. Inside that subject heading, please put radio show question. And, of course, inside the Tiger's Den, well, heck, any ping will do. So let's go ahead and get this show started on fantastic and fabulous Friday. Of course, this is Tiger Financial News Network. I'm Steve Rhodes. Welcome to the show. Right now, the Dow up 189 points, 25,763 is the print. S&P's up 15, a little over 0.5%. NASDAQ 100 up 0.7%. That's 46 point. Russell's up 0.4% or 6 points. The semis are up 7. You've got transports up 54.5%. The spot volatility index up 15 pennies, trading out at 10.03. Gold's up $10. Silver's up 15 cents. That's nearly 1% to the upside. Light sweet crude up 15 pennies. And natural gas having another nice day, up nearly 4%. Leading the charge to the upside, it's Amazon, up 27 bucks, helping to add to the conviction yesterday about no, do not short Amazon. We've got Priceline up 20 bucks, BlackRock up 17, that's 3% to the upside. Google up 16 bucks, AutoZone in the zone up 1.25%, 9, nearly 10 bucks. Aflac is quacking, down 8% off with 8.4 million shares. You've got Concert Pharma. Heard me talk about a concert yesterday, down 27% off 750. Facebook's down about 7. So we have plenty to look at. Of course, I want to look at what you want to look at. That takes us right to Home Depot. James wrote in just before the show. He's long in Home Depot. He's got a nice profit in, and the question is, should he take the profit? I don't know. Let's go take a look at the Home Depot charts. Let's first start off with our 3 time frame charts out here. We got the daily, the weekly, and we have the monthly. We've got our set of TAS market profiles, so they help us to define areas of support or resistance. We can see that yesterday, Home Depot closed above the top of its daily box. That's 193.13. Of course, you're above it today. If we take a look at weekly profiles, you're above those, monthly profiles. So what Home Depot is communicating to us is it's above resistance. Do you want to sell something that is above resistance? Now, I know everybody would like to sell the top tick. In all my trades in life, I've only done it twice, and it wasn't really the top tick. It was within 2 pennies of the top tick. And did I get any more satisfaction out of that trade than any other trade? The answer is no. The other trade was buying the bottom tick of the euro when I was trading the currency pair. Or the Great British Pound. I apologize, because that was the big trade out there. But so this show is not about selling the top tick or buying the bottom tick. It's really about having that big, juicy steak or burger or maybe lobster or whatever it is that you like. It could just be lobster mac and cheese out here. But let's go take a look at price projections. Let's go see what the charts of Home Depot are communicating to you and I. See if we can figure this out. When we take a look at the weekly time frame out here, what pops up in your mind immediately, and I know somebody out there just said, hey, Steve-O, look at that A to B equals CD pattern inside the weekly chart. Now, for those of you that are new to that pattern, the lightning bolt, what we do is we just start with a swing point. We're going to go with what we will call the more conservative pattern on a weekly basis, and the swing point is the low out here on October 31st. We know, see, the lightning bolt does 75% of the work for you. That's really the cool thing about it. It is a projection tool. Projection tool to the upside, projection tool to the downside. The B point on this, before we see any kind of real change in trend out here, for me, is May 15, 2017. That's my B point. The retracement takes us down into July 24, 2017. About a 0.382 retracement. Actual exact number, 39.87. So that qualifies. And then this gave us a price projection. Now, today, I should say this week, which is today, this week, we can see that price has gotten to the 1.272 A to B equals CD to the upside. 197.24 is the projected number. We're trading at 197.08 right now. We've had a high of 198.28 out here. Here's what I want you to notice, James. Number one, I'm going to answer your question. I don't know what your time frame horizon is on the trade. So anytime you guys send an email, give me just a little bit more information. It'll make it a little bit easier. But I'm going to share with you on the charts where Home Depot is least headed to next. And it's not where we're priced out right now. You see, we use this as a extraordinary, unstoppable, unbelievable, extraordinary, if I said that once, I'll say it again, tool to help us project where price is headed to. We don't say an A to B equals CD, it completes a one-to-one, and that's it, kaput, adios amigos. Many do that, and many make a gargantuan mistake. That is not how this tool is used. This tool is used to help project price. And then what you and I need to do is totally understand how the market communicates to us as prices getting into those areas. We can see here on a weekly basis, the one-to-one was hit, and then a doji candle formed. That's the week out here of December 4th. Remember, doji candles, they only mean something at resistance. At least that's what Stevie will share with you. You can come up with other tools and techniques, but only at resistance. So 1-to-1, A to B equals CD doesn't mean we're at resistance. In this case here, it just tells you that, hey, the market is a bit tired. Now you see a second doji out here the week of December 11th, just communicating to us what we already saw on chart number 1. Well, was there a bearish reversal signal at all? And the answer is no. And until that shows up, until the cavalry shows up, you have no information to suggest that you should go take a short trade, other than maybe some kind of instinct or something along those lines. I don't know what those lines would be. Now when we take a look at this thing has done a retracement of about a 0.382 retracement, and we take a look at where price is traveling on Stevie's C to D leg, this tells me, James, that where price wants to target is 211.66. That's on the weekly chart for Home Depot. It looks muy bueno. Even a pullback to Stevie's red line at 186.11 is nothing more than your next entry point on a weekly chart. Steve Rhodes with TFNN. We'll be right back.
Hi, I'm Steve Rhodes, host of the Trader's Edge, heard daily at TFNN.com and author of Mastering Probability, a daily investment and trading newsletter service that I send out each morning by 8 a.m. My morning newsletter service covers exactly what the markets have been doing since last night's close, providing you with an edge on your trading day ahead. You get actionable trading ideas, including the exact entry, stop, and profit targets. Plus, I'll teach you the patterns and hidden market correlations that will make you a better trader. As a subscriber, you'll gain access to my 90-minute money management workshop, where I'll teach you the secrets that'll save your assets. The bottom line, I've got your back, including a 30-day money-back guarantee. See for yourself the type of analysis I provide each trading day by signing up for Mastering Probability today. With nothing to lose, this is an offer you should not pass on. Mastering Probability can be found under Trading Newsletters on the front page of TFNN.com.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com. If you haven't tried David White's daily trading newsletter, The Path of Least Resistance, then this month is your perfect opportunity. On January 17th at 5 p.m., Dave will be hosting a special subscriber webinar where he'll be presenting on the newest feature in his newsletter, short-term sector charts that work on both the madness and wisdom of crowds. Join Dave on January 17th as he describes the method he uses to recognize these signals on a sector-by-sector basis, and as he discusses how he used this new tool to buy the gold miners in their seemingly darkest hour in December. And all new subscribers get a 30-day money-back guarantee, so you have nothing to risk. If you're a trader scouring the market for the next great trading opportunity, then now is a great time to sign up for the Path of Least Resistance. For all the information and for details on Dave's subscriber event taking place January 17th, visit the front page of TFNN.com.
Steve takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Welcome back, folks. Let's go to Ron in Denver. Ron, thanks for calling. Thanks for holding. How are you today?
Great, Steve. First of all, I wanted to thank you. You were recommending UNG, and so Monday they did that reverse split, and the stock was around 23.5. And anyway, I bought some 24 calls, 24 of them, and at 13 cents, and sold half of them today at 98 cents.
Right, that's a nice trade. Good job on your part.
So that's about 6 times your money in a week. So, and I still have 10, and I just wondered on UNG. They expire a week from Friday on my calls, but I just wondered what's your target near term on that?
Sure.
Now,
so let's go back to the chart that you used to go ahead and enter that trade. And folks, what I did earlier in the week with regard to that inside the newsletter was I made a recommendation for those folks that were looking for a trade in natural gas that it was time to go ahead and take that trade right here on the trading day of January 8th. And the reason that we did that was just simply because we saw price. First of all, we saw a nice move. Well, let me redraw this A to B equals CD pattern. So we saw a nice move off of the bottom back here, December the 21st. Gave us a confirming signal to go ahead and try to take a long trade out here on December 27. Moves higher, pulls back. Pulls back where? To what Stevie's red line out here. And what took place yesterday really was the test of that oscillator unchanged line as the price oscillator was at 0. So that's a real big confirming message, and you had a nice wide-ranging bar. And what we had done ahead of that trade for a price target was we used that A to B equals CD tool. So the A to B equals CD price projection on this, Ron, is 327.50. Unfortunately, this doesn't tell me when price is going to get there, right? So you're trying to make a time decision as well as price. I would also suggest at this stage more likely 341 is the outcome on this. To try to nail this towards where price is going to be trading next Friday, it's a very bullish move that we've seen here at this stage of the game. It's done everything that we wanted it to do. And you now have a rising price oscillator above 0.
Why is UNG right now 25.42? You're saying 341.
Sure. I apologize.
What are we miscommunicating on?
No, yes. The miscommunication is I'm looking at the underlying instrument for UNG, which right now is
Okay.
the February natural gas contract. And that
No, I'm
is,
in the UNG, the stock, UNG.
I know you are, but the only way that I
Okay.
can
I'm
provide you the only way I can provide you with good information about UNG is to track
I see,
the
okay.
underlying instrument. The UNG, I can do stuff on UNG. It's not gonna help. The truth is, it's really not going to help you that much. It's not going to help me. It's really going to be all about the underlying instrument out here.
Understand. Okay. I apologize.
Yeah, I mean, I'll pull up UNG, but the reality is, what you should be really tracking is the natural gas
futures.
contract. Now, at some point in time, UNG is going to add the March contract in here, and that could change things just a tad as well. And that's where trading the ETF, you've really got to be paying attention to what's inside, what the mix of that portfolio is inside there. There could be March inside there today. I don't know. I haven't looked at it for a couple of days out here. But the February contract for natural gas says it wants to run to at least 327. It's at 321. That's higher.
Okay,
There's not
wow.
any indication
Wow,
here that you should sell. If I look at the profile levels for the natural gas contract, well, this is January. This is February. This also is very bullish to me, and says that it probably wants to run maybe even up to about the 340 type area. So what should you do? You've done the first thing, which is to take profits, and you've taken some really nice profits out here. So you're in a winning trade no matter what, correct?
Correct. Yeah, no, I bought them at 13 cents and got out at 98 cents on half of them.
Yeah. Okay.
So,
So as far as UNG, that same price projection, would be 25.73. That's only another 30 cents or so from where we're trading. More likely 26.77. But the most important thing to understand is UNG is going to take its call from what the natural gas contract is doing. And that data is just much better for me in trying to help you identify where this is going to. I don't see a reason to sell today.
I appreciate that. I'm also long your Newmont calls, but could I ask you, do you have time could I ask you, just in terms of Europe, there's an EWI, which is Europe, and an EWG, which is Germany. What do you think of the European ETFs over there? Any thoughts?
I do. Let me see here. If you give me a second here to try to chase down what I'll show you. So let me see here.
EWI was Europe and EWG was Germany.
Yeah, and I want to show you.
They had low PEs for their stocks, but I don't know.
Right. So let me take a look at the DAX with you. All right. And we're going to do this right now. And this is how I take a look. When you ask me a question about foreign markets, in essence, what is it that I think? And what I want to know is I want to know what traders around the world think. And by doing that, I want to take a look at what does the indice trade for in multiple currencies. Now, you and I just think in terms of U.S. dollars. That is the left-hand side of this chart here. And so if we were going to chart the DAX, and you were going to find ETF to trade the DAX out here, you would say, you know what, Steve, maybe there's a breakout that's going on because the swing point here from the month of June in 2017 at 12,951 has been broken. And I'd say, you know what, you're right. You're absolutely right. This is a monthly chart, by the way, that we're looking at. But then I would point out to you, maybe it's broken out in U.S. dollars, but my goodness, it has not broken out in euros. Sounds like a problem to me. Has not broken out in yen. Sounds like a problem to me. Has not broken out in Great British pounds. Sounds like a problem to me. So if the question is, what do I think about Europe? I think it hasn't broken out across the board. So money's not really flowing in there. Where the money's flowing in is the U.S. stock market, right? The reason why the Dow is moving like it is because it's broken out in every major currency. We happen to be living in this one world market out here where you can trade anything you want at any point in time during the day, at any point in time during the evening. So am I fond of trading Germany right now when you can trade the U.S. markets? So I would say that's the better opportunity. If I do the same thing here, Ron, and let's see if I can find this chart here using the emerging markets. So give me a second. I think I've got it. And I can pull up the FTSE as well. This is what I would also suggest that you do. Try to take a look at each of these markets in currencies. And if we take a look at emerging markets, they're up against resistance in euros. They've broken out in yen. They've broken out in pounds. And right now they're headed to the next resistance level in dollars. I'd rather see you here at this stage than I would rather see you inside of the DAX. And then to just finish this off here, see if I can do this. I think I've got the this in the FTSE out here. So we'll take a look at the UK. And what this is going to say to us is that the FTSE's broken out in US dollars, not in euros, not in yen, and not in pounds. Does that help you out? Uh-oh, did I lose you? Ron, go ahead.
No, I'm here. Thank you very, very much. Thank you.
Okay, you bet, you bet. Steve Rhodes with TFNN. We'll be right back.
In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
Many of our new listeners have heard about the Tiger's Den. The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of the TFNN shows, plus see all of the charts as they happen live and have access to archives of all of those charts. You can test drive the Tiger's Den absolutely free for 30 days and greatly enrich your knowledge of these markets and how to make your money work for you. Details on the Tiger's Den are on the front page of TFNN.com. Platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Techno-Mental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Techno-Mental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Techno-Mental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com. Tiger TV is an exciting way to experience TFNN programming. See high-definition video giving you crystal clear charts, as well as seeing some of the faces of TFNN's highly acclaimed financial experts with crisp, full-fidelity sound. Catch Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, Larry Pesavento, Think or Swim, David White, Andy Hecht, and Daryl Martin in crystal clear, high-definition audio and video. Tiger TV, exclusively at TFNN.com. This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Ron, I wanted to let you know during the break I went out there and checked on the UNG holdings as of last night. It is still just the February contract that is out there. My apology, too. There seems to be a delay between my home, the TFNN office, and then yours, and sometimes it seems like we step over each other, and that is certainly not intended. It's awkward at best, and apologize for that. I still, I love the call, so please call in and we'll kind of work through it. But you've done the best thing which is take some profit. And if we take a look at the February contract, 327, 341 is where it looks like it's targeted. Just doesn't tell me when out there. So in the first segment, we were looking at Home Depot, and we were looking at A to B equals CD patterns, and a request was made if we could do the same thing with the S&P 500. And that's what I have up on my screen right now, only because, and it goes back, this is an A to B equals CD that goes back to 1974, just simply because of the lack of data, in essence, that I have out here. But you can see the A to B equals CD pattern. You take a look at the price move from 1974 to the high out here in 2007. And I use that because that is a higher high than we made in 2000. So that is the only logical B point. The other side of it is, even if I were to use 2000, it says I can't because we make a lower low in the month in 2009 in January versus the low in January of 2002. Plus, when you get rid of the noise, right? You can clearly see what went on here in the market in the S&P 500. You can see the consolidation pattern. You can see the clear consolidation pattern. So from 1974 up to 2000, the 2000 really became the consolidation point. Price moves lower down in the 2002 lows, moves back up into 2007, moves back into the consolidation pattern in 2009, gives us a measured move equal to or greater. We're definitely greater. It doesn't tell us how much greater. Again, that's a projection tool as well. We've got the A to B equals CD as a projection tool. Now, what's most important for you to visually see what's going on here is you can see that the price move between 1974 and 2007, look at the price move that we have now. So much stronger. And it really is kind of a lead-in from Ron's question, where he said, hey, can you take a look at some of these foreign markets? What do you think about that? It's not what I think. The real question is the fuel in the fire for anything, natural gas, the S&P 500, gold, anything, has to be what's going on in those products in other currencies, right? That's where the fuel in the fire comes from. If the product you're looking at is breaking out in all currencies, you can conclude that traders from around the world are putting money into that instrument. That is into that specific instrument or instruments. And that's that's the type of fuel to move higher out there. Now you take a look at this S&P 500. Well, by the way, the S&P is breaking out in every major currency. We're just looking at the major currencies. You could say, hey, Steve, each of those are just a part of the U.S. dollar index. You're exactly correct. We could have added the loonie. We could have added the Swiss franc. We could have added the krona out there. We didn't really need to do that. We're just in the four primary currencies. But just because it's breaking out in dollars doesn't mean it's breaking out in euros. Doesn't mean it's breaking out in yen. So you go through and you do that type of workout here. S&P breaking out in all currencies. This move off of the 2009 bottom is super strong. Super strong. We're above the 1.272. That was 2017. We're now on our way inside the S&P 500 to 3116. There's no reason that the S&P 500 has to stop there. In fact, looking at this chart right now, we would conclude it will not stop there. It's on its way to at least the 1 to 2 level, 3694 out there. Yeah, you just do the math on that. That takes you to where? It takes you to 36,000 inside of the Dow. And that's probably a low target with regard to the Dow, but one step at a time. So there's my A to B equals CD so that we can take a look at the bigger picture. Now, we had a request if we could go take a look at, I think it was on the ES and the NQ. If it wasn't the NQ, just let me know. If we could take a look at where's Stevie's red line. So, yes, we can absolutely go do that. As we take a look at the NQ right now, we pull this over. You're going to see you're going to see several patterns, quite frankly. We'll go ahead and get rid of this. I'll leave it on here for now. You can take a look at it. That's called a potential butterfly pattern out here. It's like the A to B equals CD pattern. You use this as a projection. You don't just go buy the bottom or sell the top out here thinking that, hey, because this pattern's in play, that's it. It's not how it works. Well, it doesn't work that way for me. Through all of the thousands of hours and looking at these patterns and trading these patterns and always going back and answering the question, why was I wrong? Why was I right doesn't work. It's why was I wrong, right? It's about trying not to strike out. Yeah, limit your strikeouts. You're on base more often, and that's really what it's all about. So here you've got a nice potential three drive to a top. You've got a potential seventh wave move. That's the letter G. Stevie Wonder's chart singing in the key of G out here. Doesn't mean it ends today. This is inside the NQ. Today is going to be a Tom DeMark 9 count. You know how we pay attention to those at the close of the session. But to answer the question from Beverly, I believe it was, Stevie's red line is 66.79. And what do we know about Stevie's red line? That's support. Any pullback, any move lower out here is nothing more than pulling back to support. You pull down below that, what does that mean? That means you need to go look at some other support levels, see what patterns are in play, to see if maybe it's the beginning of a move. But inside the NQ, it's got some potential patterns out there, but it's got no turn, no reason to not continue to head higher. There's the A to B equals CD pattern. We can add that too. Here, just the conservative one coming off of, well, I don't have the date because I don't have my crosshair out here, but you can see we're at the 1 to 1.272. You see the 55% retracement. If I was going to ask you on these charts, what's the next price projection level for the NQ, you would say, that's easy, Steve-O. It's 68.61. The next A to B equals CD on the daily chart for the NQ. With regard to the ES, we can do the same type of thing out here. If we want to take a look at, we want to use more than just those pieces of information, right? We want to understand where there's other levels of support and resistance by looking at those market profiles. If we take a look at this ES mini on a daily basis, you'll see that no seventh wave. There's a sort of three drive to a top pattern here. When I say sort of, you like them to look a little bit better than this. This in essence is the same pattern that we looked at inside of the NQ, only the NQ looks a whole lot prettier. And I like pretty butterflies out here. So yeah, this is one. It qualifies somewhat. But I'd say, you know what? Today's session is going to be a Tom DeMark 9 count. This bar today is not traded into bars 5 and 6. So there's no reason. It tells us strong momentum. There's no reason that price has to pull back. If it does, 27.55 is the number on that. Look, Monday we won't be with you live because of Martin Luther King Day out here. The markets are the New York Stock Exchange is closed. But watch the futures markets. And you really want to kind of mark the close of today and the ES Mini and the open on Sunday of the ES Mini. If price starts trading below those two levels, whatever those numbers are, that's suggesting a retracement is in place. Steve Rhodes with TFNN. We'll be right back.
Are China A shares hot or not? If you trade China A shares, now may be time to take a closer look. Trade CHAU or CHAD, Directions Daily CSI 300 China A Share Bull and Bear ETFs. China A shares in either direction. Visit directioninvestments.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC. The Taz Profile Scanner Plus, developed by John Logan and his team, is a standalone piece of software that can change the way you trade. Let the Taz Profile Scanner work for you by scanning over 5,000 financial instruments such as stocks, ETFs, commodities, futures, and Forex. Right now, you can get a 30-day free trial to the Taz Profile Scanner Plus right at TFNN.com. And when you sign up, you gain instant access to John Logan's Logan's most recent webinar, How Price, Volume, and Time Make Market Profiles So Unique. This hour-long webinar with John Logan will walk you through the most powerful features of the scanner and how you can use it to become a more successful and profitable trader. You pay absolutely nothing for 30 days while you try out this software risk-free. For more information on the TAS Profile Scanner and to get your 30-day free trial today, visit the front page of TFNN.com. No matter what kind of trader you are, 2018 is a great time to try out a subscription to Tom O'Brien's Gold Report. Whether you just plan on diversifying your portfolio with some exposure to gold and gold mining equities, or you're a gold bull that sees 2018 as the year of commodities, now is a great time to sign up for the Gold Report. Tom O'Brien publishes his Gold Report every Monday morning before the market opens and covers a variety of topics including gold, silver, platinum, copper, the XAU and HUI, the dollar, bonds, South African rand, as well as more than 20 of the most actively traded mining equities. Start your 2018 off with a bang and sign up for the Gold Report today. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. For all the details and to start your subscription right now, visit the front page of TFNN.com and you'll find the Gold Report under Investment Newsletters.
Don't forget, you can listen to TFNN live on your mobile device 24 hours per day. Go to TFNN.com, then hit Watch Tiger TV. That's TFNN.com, then hit Watch Tiger TV for the latest market information.
Welcome back, folks. Dow's up 193. Jan writes in and says, Steve, I know you went to see the movie The Darkest Hour last night. I'm going to it tonight. What did you think? Geez, I don't want to influence you or ruin the movie or anything like that. But here's what I will share with you. And the movie referring to, or she was referring to, if I didn't say, was The Darkest Hour. The thing that I liked most about the movie is the metaphor behind the movie. And that I loved. And that's not necessarily something that everybody think about. Just the metaphor. The metaphors are very empowering or disempowering thoughts that each of us have, and situations that each of us have been in. I can't guarantee anything. I'm pretty sure each of you, if I ask you to pause for a moment, you've had a darkest hour. In fact, many of us have had more than one darkest hour. And go back to think about those darkest hours. In fact, you can use this for trading. Trading is all about psychology. When you and I are evaluating what a market is doing, I'm just using psychological tools to help us identify where price is going, the upside, the downside, bullish, bearish, reversal candles, things of that sort. This is nothing more than a psychology event. And we have to have the psychology in our minds correct. And so what I really liked about the movie, The Darkest Hour, because metaphors are what either let you break through or break you down. And this is what I have learned, and I have learned it the hard way. Maybe you have too. But in your darkest hour, the thing that you don't want to do is you don't want to come from a place of weakness. I guarantee you, this I do guarantee, any of us, and my hands up, that have made decisions from weakness in their darkest hour were basically the worst decisions you could possibly make. So if you know somebody going through a darkest hour, if you are going through a darkest hour out there, make sure you come from a place of strength. Hey, not all decisions work out, but at least come from a place of strength. And I loved the fact that, it could just, I loved really that metaphor about it. And that movie will show you how obviously Europe came through, and the world, in essence, came through its darkest hour. Remember, folks, all that you and I are talking about when we're taking a look at where something's going and trading and investing. And the reason we went and looked for Ron at what was going on around the world in those currencies was to understand the emotion. Right? The emotion, that is the only thing that moves prices higher and lower out there, and the emotion of money, right? That's what you trade with. That is it. If you don't need to overcomplicate it. It really is that. So that's what I loved about that movie. And because you see, there are people that think in life that whatever the situation they're in, that, for example, they have a noose around their neck. You know, people like that. Maybe if you ever had that, you know, if that is your metaphor, you tell me how easy it's going to be for being able to break through whatever obstacle it is. Can you? I suppose you can, but typically you're relying upon somebody else to break through for you. That's not as much fun as you actually breaking through. You have to take a disempowering metaphor like that and change it into a empowering one. I used to think I had a noose around my neck many, many years ago. And how did I break through that? I don't have it on right now today. Many of you have seen a couple different necklaces that I wear. And I just was a play on words. It wasn't a noose, but I used the word muse. And I have a couple of necklaces. Whenever I get that feeling, all I do is touch that. And it reminds me that I do not have a noose around my neck. All I have is a muse around my neck. And each of those necklaces have extraordinary powers. Do they really? They do in my mind, and that's all that you need. Okay, so enough about that. I had a request to go take, but that's why I thought of the movie, Jan, and maybe you'll have a different metaphor that will come from it. So let's go take a look at FireEye. FEYE is the ticker symbol out here. And if we take a look at FireEye and we just pull it back on this monthly chart, none of us are going to be very impressed, right? We take a look at FireEye, we can say since 2016, this thing has been doing nothing but building a base. So perhaps, and there's what we also know, if you're a reader of the Art of Timing the Trade out there, that this could be just simply a sign of accumulation. Right? Could be a sign of accumulation. You never like this so-called, they call it the Eiffel Tower pattern, straight up, straight down. When you go straight up and straight down, basically it says you are a long time away from ever getting back up to those highs. So no one should take a look at the FireEye chart and say, you know what, maybe price will get back to that March 2014 level of 97 bucks. I would throw out maybe not. Maybe never, ever, ever again will it get back there. Maybe it will. But the thing here is this thing never, when it made that pattern, it never made a new base. It never made a new plateau or anything. And we're at that plateau area or base area as we speak inside of FireEye. So that's between about 1060 or so, maybe up to about 18 bucks. So, hey, nice percentage move. So if you go back and you take a look at the daily chart out here, you just have to keep that in your thought pattern. Now, in the case of FireEye, you might say, hey, maybe they got some cool security stuff. Hey, I once traded this stock and kind of said, I think I'll go find something better to trade. Here's what we know about FireEye right now is that they had a huge gap to the downside. Gaps are your friends, bullish or bearish, on November the 2nd. And prices above the bottom of the gap. That would be the trading session from November 2nd, which, by the way, volume, if I didn't say so, was 17 million shares. It's now today above that level, 1517. And I would say this says that, okay, old resistance may be new support. If FireEye closes below or above 1517 today, I would also suggest to you that it's going to make a run for 1631. Whether it gets knocked down at that area or not, I don't know. It is resistant, so you just pay attention to that. What happens if price closes above that, even on light volume? Old resistance would become new support. And that's my take on FireEye. I hope that I gave you the information that you wanted to see, and that was for Bob in Spokane. We've got Harley wants to take a look at ticker symbol BX. BX is a Blackstone group out here. Again, just start off with a monthly chart. We take a look at what's Blackstone doing out here. It's running up into a potential resistance zone. The top of its monthly profile, 3590. From a monthly standpoint, this has already done 51 million shares. And the swing point that it is continued with has 71 million shares. This is moving higher with volume. Even if I look at the swing from October, 82 million shares. This is moving higher with volume. More likely than not, what Blackstone is doing is this is setting up an A to B equals CD to the upside. Can't guarantee it's going to, but what I can suggest to you is when it does clear 3509 out there, which it is right now, 3543, really when it clears 3590, this is going to go make a run for its highs. And that was the May 2015 level. That's going to be in the 4359 to 4565 level. Right now, if I took away profiles, this is giving you a confirmed A to B equals CD for the month, as long as price closes over 3509, because I'm sure with it only being January 12th, that it's going to blow away the volume for its swing point from July 2017. And that is Blackstone. BX is that ticker symbol. We'll be back. We're going to go take a look at gold for Peter in Park City. Stay tuned.
Today, it's hard to tell if the economy is coming or going. Regardless, I want my money going in the direction I choose. If that's your stance as well, then you want to know how Everbank can help keep your money thriving just the way you want. Is growing your money a priority? Everbank is committed to a yield pledge promise to pay high yields on your checking, money market, and CD balances. Looking to diversify? Everbank ingeniously developed accessible ways to spread your money around the world into foreign currencies and even non-FDIC insured metals. And when it comes to your wealth, they bring a highly experienced and global perspective to help you manage it. Everbank's financial philosophy flies in the face of the status quo. They believe your money's performance should not be determined by today's economic circumstances, but by the drive to rise above them and create opportunities that favor your objectives. If that excites you, like it does me, call 1-855-750-4051 to find out what they can do for you. That's 1-855-750-4051. Call them today. Everbank is a member FDIC and equal housing lender. Hi folks, Tom O'Brien here. If you'd like to get my daily newsletter, Market Insights, then now is a great time to sign up for a 30-day free trial. Every morning by 9:30, I send out my morning letter to subscribers with market commentary on a variety of markets, currencies, and commodities to keep investors up to date on the day's trading action. Included in Market Insights are specific buy and sell recommendations for stocks, ETFs, and even options, with stops and price targets included for every trade in my newsletter. If you'd like to try my newsletter risk-free for 30 days, then head over to the front page of TFNN and you'll find Market Insights under Trading Newsletters. I use my years of trading experience to bisect and dissect the market every morning and give my subscribers the most important information they need to know for the day ahead. I even issue afternoon updates for my subscribers whenever warranted with important market action. I'm always scouring the market for the next great trading opportunity. Sign up for your 30-day free trial to my daily newsletter, Market Insights, today by visiting the front page of TFNN.com. Wow! Go get 'em, folks.
TFNN has put together the finest programming lineup each trading day, featuring some of the most knowledgeable and respected financial minds in the nation to educate traders and investors. On Mondays, Wednesdays, and Fridays, we broadcast 8 hours a day, starting at 9 a.m. as Larry Pesavento kicks us off with Trade What You See. Tuesdays and Thursdays, we broadcast 11 hours. Get an early and healthy start to your day as Nico and Paige bring you Living a Primal Lifestyle. Then catch Andy Hecht at 5 p.m. with the Commodities Hour, following the Tom O'Brien Show. Swim lessons from TD Ameritrade Thinkorswim is now at 11 a.m., followed by Basil Chapman at 12 noon. See the TFNN program lineup via the link on the front page of TFNN.com to get a complete overview of our TFNN shows and hosts. And keep TFNN's Tiger TV tuned in on your mobile device, PC, or Mac for the latest financial news and information throughout the broadcasting day. TFNN.com, educating investors.
This is David White. Stay tuned because coming up next is the Power Trading Hour right here on TFNN.
Welcome back, folks. So we have a couple of requests out here. Let's go to them. One is gold. With regard to gold, let's start off with the market profiles, Peter. You can see the 30-minute, the 240, the daily. The daily's one I love, and the weekly. You've got green shoots basically across the board. It's just a matter of time before the weekly turns green out here. That means we are above resistance. Resistance on the weekly was 1322. That says that price, we've broken out. Gold is breaking out. And we had a brand new profile, showed up this week. 1327 was the top of the box. Is now above resistance. Okay, if it's broken out there, where is it headed to? Well, if we take a look at the short-term chart out here, you've got an A to B equals CD to the upside. The 1-to-1 gives you 1397. The 1-1.272 gives you 1422 out there. Quite frankly, I think you should be looking at the 1-to-1.618, 1452 as a number. That's just on the short term. Gold did everything you wanted it to do this week. I mean everything. And so, therefore, subscribers and I, who were already long gold and the miners, went ahead and added to our positions out there. You and I have been talking about this for a long time. We're waiting for gold to pull back, test Stevie's red line, and bounce from there. And that's what we were waiting for, I don't know, 8, 9, 10 trading sessions. We were already long. We were anticipating. We weren't exiting our trade. And as soon as that happened, what did we do? We added additional positions to the gold trade. Now, does that mean that gold can't do something else, like pull back and I could be all wrong? No, it absolutely could. This is the only chart right now that scares me just a bit. And that chart here shows that gold in euros has not broken out. You just go back to Ron's question and look at what's going on around the world in currency. I want to see gold break out in euros. Longer term, where's gold headed to next? Hey, this is a weekly chart. And for this week, we're closing above 1324. That's the horizontal trading range. It looks like we're headed to 1462. There was also a question to take a look at what's going on inside the euro. Don't have much time, but it looks like you've got on a monthly basis an A to B equals CD to the upside. 133, 137. Those are the numbers on the horizon. But there's going to be a bit of a stop here in several weeks. Folks, stay tuned. Your favorite polar bear in mind, David White's up next. Tom O'Brien. I'll see you on Terrific Tuesday. Remember, closed on Monday. Take care. Have a great extended weekend.
Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date, active trading information that will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters.